This is really important. The big bank analysts, they get hoity-toity. Oh, I only talk to something that has $1 trillion of this or that.
Yep.
Herman Chan grew up in the trenches of bank analysis. What's the difference, Herman Chan, of covering a smaller bank, a mid-sized bank, a bank blowing up in Oklahoma or California versus covering JP Morgan?
Right. A lot of it is the same. You're just talking about bigger numbers, but a lot of it is different. You have the trading aspect, you have the investment banking aspect, you just have a lot more scrutiny of the biggest banks.
Their sheer force of mass, right?
Exactly.
It's like that aircraft carrier going through the water kind of thing. Are they downplaying their success across the Herman Chan matrix of big banks? Do they want us to really know how much they're minting?
Well, you see how much they're minting quarter after quarter, and in our view, the bigger are getting better. You have the need for scale. Everybody's talking about AI these days, and JP Morgan's plowing so much money in their technology spending, like a $10 billion increase in expenses this quarter. A lot of it's just tied to AI and technology expenses. So it's something that we're looking at to show that scale matters, and I think it's going to drive consolidation for some of these smaller regional banks.
What is JP Morgan? I mean, JP Morgan is so huge these days, and they're so good in all of their businesses, yet the stock's flat for the year.
Right.
What's the driver for a stock like JP Morgan?
Right. Flat for the year, outperformed over the past 3 years. So you just see their leadership across their businesses: capital markets, investment banking, trading, wealth, growth in the consumer. So it runs the gamut, but the stock's been a bit more volatile heading into this year, given the fact that they've talked about the higher expenses I mentioned earlier, and also just some issues surrounding the geopolitical risk and issues surrounding private credit and perceived risk for that across the industry.
All right, so I worked for JP Morgan way back in the day.
Did you?
I
did not know
the Chase
this.
Manhattan Bank.
Oh yeah, that's different. That's not JP Morgan.
Yeah, we actually make money. We had a huge return on our investment into Chase. How about Citi? I also worked at Citi back in the day, up 8% year to date. What's the story on Citi? Is Jane Fraser really turned that bank around?
There's really a lot of hope and optimism that the bank is turning around. They're talking about a return on tangible equity of 10 to 11% this year, which, albeit weaker than the peers, is on an upward trajectory. They've got an investor day coming up next month, which I think a lot of folks are hopeful for a higher target on their profitability and returns. And they've simplified their businesses, right? They're at the tail end of their journey on reducing some of their footprint internationally.
I get a couple more questions there. Shannon O'Neill's waiting patiently. We got a great list coming up. It's Wayne Sanders. The idea in the show, folks, I got ducky bumps right now. I got Shannon O'Neill coming up, and then Wayne Sanders in the 8 o'clock with all of his military Pentagon expertise.
Colonel Sanders is great.
It's really wonderful. So Herman, I'm just going to give you 2 quick questions here. We'll see you back in the 8 o'clock hour as well. I was weaned that big banks should do nominal GDP plus 200 beeps. So if nominal's 5%, 7 to 8% per year or that.
Right.
JP Morgan, 20 years annualized return, 12% per year.
Right.
JP Morgan, 10 years annualized, 19.9% per year. That's not in my textbook. Is it all because of James Dimon?
It is. It's how they manage their balance sheet. It's their conservatism, but it's also their growth. I mentioned market leadership across their businesses. You see that year over year over year. They are always are conservative when they talk about the markets, but yet they also outperform versus their guidance and their expectations. So really strong results and culture that's driving that performance.
Quickly, why aren't we seeing more bank M&A? You mentioned AI and all this. All my radar's up.
Right.
When do the regionals, the super regionals, the sub-regionals, the regionals, when do they finally mate?
Yeah, heading into this year, we expected a lot more activity. We haven't seen it yet. I think there's just a bit of a disconnect between the buyers and the sellers. The potential sellers are saying, we're at a pretty good market environment where the balance sheet growth is continuing. We're seeing a lot of activity on the commercial lending side. There was hope for less interest rates this year, so that could help on the net interest margin. So from a fundamental standpoint, banks are doing great. So why would you want to sell in this environment without a really strong, healthy premium? And then the buyers are saying, there's some uncertainty in the markets. You've seen bank stocks come down a little bit before the past week, but that's really, I think there's a bid-ask disconnect at this point.
Sarah Herman, thank you so much. Really, really appreciate it this morning. We'll have Mr. Chan back in the 8 o'clock hour as well with Bloomberg Intelligence, piecing together, I should say, all of our banking